First, they recommend stripping away broad, generalized corporate grievances, such as off-topic rants regarding the pharmaceutical industry or wealthy healthcare CEOs. While these rants stem from authentic frustration, they ultimately dilute the core message and cause parts of the audience to mentally check out. Instead, the hosts suggest doubling down on specific localized absurdities. They highlight micro-injustices that universally resonate with policyholders, such as an automated algorithm imposing a $45 monthly penalty simply for removing a vehicle from a policy, or a driver paying $250 out of pocket for a broken fog light just to avoid a devastating premium hike. Second, the critique advises elevating the illusion of choice from a passing anecdote into a central pillar of the argument. The creator notes that massive companies like USAA and Progressive are essentially intertwined corporate entities, meaning that consumers shopping around for better rates are simply trading one algorithm for another under the same corporate umbrella. The hosts use a powerful rigged casino analogy to explain this structural trap. They compare changing insurance companies to a frustrated gambler storming away from a losing blackjack table to try the roulette wheel across the room. While the player feels empowered by making a choice, they completely forget that shifting tables does not change who owns the house. The house still wins, the fundamental odds remain identical, and the money goes into the exact same vault. Framing a 14-year perfect driving record through this lens validates the audience's underlying suspicion that corporate monopolies have completely eradicated true loyalty discounts. Finally, the hosts urge the creator to deeply explore the financial and geographical disconnect regarding risk pooling. The transcript highlights a compelling hypothesis. Safe, rural policyholders driving low-risk vehicles are actively subsidizing multi-million-dollar disaster claims in massive metropolitan areas or coastal zones. They suggest contrasting a parked 1992 Chevy Silverado farm truck, which costs a mere $1 a year to register under Arkansas Disabled Veteran Benefits, against the massive overhead of metropolitan liabilities. While there is an inherent risk that a hyper-focused rural narrative could potentially alienate suburban listeners, the hosts argue that extreme, highly specific examples actually increase universal relatability. A suburban driver with a minivan sitting in a garage will instantly project their own localized frustrations onto the tractor example, wondering why they are paying premium rates as if they are street racing through downtown Manhattan. By focusing the emotional tone, exposing the systemic monopoly, and emphasizing this structural unfairness, the creator can transform individual shame into collective validation, effectively motivating the audience to speak up and share their own stories.